1.2 billion in net income, 2.9 billion in revenue. These are big numbers, but investors still pretty disappointed. What's your response to this big stock plunge? I believe it's the biggest stock market drop for Airbnb since going public.
Well, I've tried to make sure that we focus on what we can deliver. And you're right, Emily, we delivered a record quarter, $1.5 billion of EBITDA, nearly $1 billion in free cash flow, $3.3 billion in the trailing 12 months. I think that, people in the world, this is a very uncertain time, and everyone's really looking for indications of what the future holds. We've tried to make very clear on the call that we're actually feeling very confident about Q4. So people are traveling. That's why results were really good in Q3, and we're actually feeling really confident. And I want to make sure people know that.
So let's hold in on this moderating of booking growth that you see. If we are heading into a long-term recession, who's to say that consumers aren't going to cut back on travel or aren't going to choose to stay in cheaper, closer places rather than splurge on that trip abroad, and that's going to add up for Airbnb?
Well, this is a great point, Emily. One of the things I just say, though, is that one of the things we learned in the pandemic is that we have a very adaptable business model. For example, recall in 2020, Airbnb was the first company to rebound in all of travel. That's partly why we had such a successful IPO. And the reason why is we are a more affordable option. We have nearly every type of space in nearly every community. So if people cut back cross-border travel, they might start working more from Airbnb. So we found a very resilient model, and that's something I'm feeling really confident about.
Chris Bryant, our Bloomberg opinion columnist, had an interesting take. He suggested if Airbnb has a problem, it's that you're making too much money. How do you respond to that?
No one would ever told us that 2.5 years ago. We were losing $250 million a year in EBITDA. And of course, now we delivered $1.5 billion in EBITDA in the quarter. We are increasingly investing more in the customer experience every year. The reason we're getting more profitable is we're more efficient. We're incredibly disciplined. We only have 6,000 employees. We spend a lot less on marketing than any other travel company of our size in the online space. But with AirCover, we're investing a lot more in the customer experience this year. So we're going to continue to be more efficient, but we're going to continue to deliver more and more for customers. And I also understand that people really care about value. They want to make sure that Airbnb is still a brand you can come to, get a great value. We're known for affordable travel. And I know that people are really concerned about whether or not our Airbnbs will continue to be affordable, and they will be. We're going to continue to focus on making sure our prices are competitive. And so that's what we're focused on.
So let's talk about the transparency around pricing that you hinted at. I think we've all had that feeling of looking at a rental on Airbnb, then we click all the way through and the price changes given all the fees, the cleaning fee, etc. What can we expect that transparency to look like?
Well, yeah, Emily, I think there's two things going on. The first is we want people to understand our pricing, not be surprised. The second is we want to make sure that when they do see the final price, they feel really good about the final price, and it's still a great value. So we are working on updating some of the designs for our platform to make everything even more intuitive, and we're going to have some updates very, very soon. So stay tuned.
Let's talk a little bit about average daily rates. There's an expectation those are going to come under pressure in the next quarter, given the strong dollar, if the bookings mix shifts to potentially cheaper rentals. Can you give us some insight on consumer preferences right now? What do consumers want that you're seeing through the holiday season and into 2023?
We're not seeing a major change. I mean, what I would say is the reason that price per night on Airbnb has gone up in the last couple of years is before the pandemic, most people were using Airbnb to cross the border and stay in a city and stay in a 1-bedroom, 2-bedroom place. Now, a lot of people are booking 3, 4, 5-bedroom homes, and they're doing it because they're going with their friends, their families, their coworkers, or they're living in the house. And so now the average daily rate's higher because the homes are bigger. What we think is when Asia recovers, that could moderate price per night a little bit, but that's a good thing because that will actually lead to a lot more volume because you get an entire continent to be traveling a lot more. And I do think you're going to see that grow. So we actually are expecting a pretty stable average daily rate. We're not seeing major shifts in the way people use Airbnb just yet.
Long-term stays still hugely popular, yes. About 20% of nights booked Give us some insight on that trend, because I wonder, is it plateauing at all? Is it slowing down? I mean, is the growth that you saw there over?
No, no. I mean, honestly, long-term stays is still the fastest growing segment by length of stay on Airbnb. Now, because the short-term stays have recovered, it's now been stable at 20%. I do expect in the coming years ahead, though, long-term stays will probably increasingly grow as a percentage of our business. And the reason why is because increasingly, I think more people are going to be flexible. Fewer people have leases. I'm not saying no one will. I'm just saying enough for this market to continue to grow. So this is going to be a huge new growth opportunity for us in the coming years to come.
It's so fascinating just how people use Airbnb has changed just in the last couple of years. Do you have any concern that Airbnb is over-reliant potentially on long-term stays?
No, because we just got to make sure that each segment is growing, and the long-term stays aren't really coming at the cost of short-term stays. So as long as short-term stays continue to grow, think of it as another layer. It's kind of like Amazon sells books, and now they sell electronics, now they sell another category. We don't think these categories will necessarily cannibalize. These are really different use cases. And a lot of people are coming to Airbnb just to list monthly stays. So this, I think, can open up a lot. I actually think monthly stays can make short-term stays more popular, because some people might book an Airbnb for a long-term stay and say, hey, that wasn't so bad staying at someone else's home. Maybe I'll do it for a short-term stay. So it may actually have a way of bringing more customers into Airbnb. That's at least what our theory is.
Interesting. You do have some analysts out there who seem to be thinking Airbnb is priced too high compared to some of your travel peers, especially if the bookings mix is changing. What are your thoughts on that?
I mean, our guests still tell us that Airbnb is the best value. That being said, we do want to make sure that as the economy slows down, our value is even better. And we do know that hotels are starting to lower prices, and we want to make sure that our pricing is as dynamic. So one of the things we're doing is we're investing a lot more in pricing tools for hosts so that they can have more dynamic pricing. And if hotels lower rates and they want to lower rates to be more competitive, they can do that. So I still think we're offering a great value, but there is no question that there's a lot more we can be doing on value. And that's something we're going to be really focused on over the next 6 months in time for the next travel season.
So longer term, obviously you've launched categories, which I know you're really excited about. Supply is going to be key. How do you see growth in supply over the next 2 years compared to the growth you saw in supply over the last 2 years? And how do you convince all of these new would-be hosts to choose Airbnb first and only, potentially?
Yeah. I think it's a great question. Well, let me say this. Number one, I expect a lot more new supply over the next 2 years than the last 2 years. The last 2 years actually been pretty hard because of the pandemic. Not everyone wanted other people in their homes. I think in the next 2 years, they're going to be a lot more interested for two reasons. Number one, the further the pandemic is behind us, the less reticent they are. But more importantly, Emily, as you recall, we started during 2008, Airbnb, during the Great Recession. And during the Great Recession, a lot of people needed to make extra money, and they turned to Airbnb to host for the first time. I think that's going to happen again. And the final thing I'll say, I'm going to give a plug, on November 16th at 8 a.m. Eastern Time, we're going to unveil a whole new, super easy way to list your home on Airbnb. And I think that is going to be a big driver of a lot more hosts. So we have some really cool new products they're going to be launching in fewer than 2 weeks, and I think that's going to add an acceleration.
All right, November 16th, we will be watching. Last question. Airbnb was started in the middle of the financial crisis. You obviously survived and thrived ultimately in the pandemic. What's your strategy on costs through this downturn? Are you considering M&A given all that cash and potentially opportunistic or advantageous valuations out there? How are you mapping this out given we could be in this for a couple of years?
That's a great question too. Let me tell you a really important lesson I learned during the pandemic. In between February and April of 2020, we were one of the first companies hit by the pandemic. We lost 80% of our business in 8 weeks, and 1,000 of us got in a foxhole, and we rebuilt the company from the ground up. And the company we rebuilt was a much smaller, much leaner, much more disciplined company. The reason we did $3 billion in free cash flow in the last 12 months is because of that discipline. And what I told the team is no matter how good the economy is, no matter how bad the economy is, we are going to try to not ever run the company differently because of the economy. You can only do that if you stay disciplined, right? You don't ever want to have to get more disciplined. So I said, we should be prepared for a storm whenever it comes. We're not going to change the way we run the company. And because of that, beginning this year, we were only, for example, forecasting hiring 7% more employees this year. When other tech companies were going to hire 20, 30, 40%, now they have to pull back. We're not pulling back. In fact, we're not pulling on the brakes. We're going to step on the gas. But stepping on the gas doesn't mean we have to spend a lot more money. It's just a lot more velocity via speed, innovation, and taking more market share.